Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it is July 10th. Hey, I'm sorry I didn't get a report out to you yesterday. I'm having some technical issues and actually had to uh, change places again today. So still having some technical issues, but I want to get this out to you. So that's why it's a little late today. So my apologies. But to kind of jump into it, yesterday was a slow day. Pretty much it was a continuation of the stock market was rallying from the job numbers on Friday and bonds. You'll see that in a little bit. But today we got the NFIB small business for the month of June. So in May we had a 107.8, which was like the highest we've seen in like 25 years, and it did drop a little bit down to 107.2, but still phenomenal numbers here. So don't let that take away from it, because that was like the highest we've seen in like 25 years. Job openings dropped a little bit from in May. So in April, it was 6.8 million, and it dropped to 6.6 million. So still a lot of jobs out there. We saw this last jobs report, participation has improved. Labor participation's improving, so that's why we saw a spike in the 3.8 unemployment rate to 4%, which is also very good news here. Stock market's up today. Again, it's kind of continuing its rally. We will be, because we're starting a new quarter, we'll see the Q2 corporate earnings coming out soon. So they're getting a little anxious for that. They're still kind of, dismissing, not so much dismissing, but they're kind of putting on the back burner the trade wars, because the underlying numbers that we're seeing is the economy is doing extremely well right now, and that's kind of what's kind of dictating the markets. Is the underlying market is showing, the markets are doing quite well, despite worries about possible trade wars here. So let's see how this is finishing up with the bond market. And as you can see, we did drop yesterday. We did close by 11 base points underneath that double layer of ceiling resistance, or floor support, actually it was, because we broke above it on Friday, but yesterday we broke below it. So again, we're down to right now about 6 basis points, so not enough quite to change pricing from yesterday. But definitely we're lower from Friday, so pricing will be different from Friday's numbers here. As you can see, we got a little bit of room here between the next level, which is 25-day moving average, and you got the 50-day below us. Now, I mentioned on Friday that we had a over bought position, and that there could be a trend reversal, and that's what we saw yesterday, as the stochastic crossover did cross yesterday, and that's why we saw a bit of a trend difference. So as we're going back into more of a neutral location here. Treasuries, kind of same thing. They did a positive crossover, and they're kind of following what the mortgage-backed securities are doing currently, and they're going to be probably approaching here at this double layer of support with the 200 and 100-day moving, or 225-day moving average right now. I'm sorry, 100-day and 25-day moving average. Sorry, getting those mixed up there. It's currently about 2.87% right now, the 10-year Treasuries. So again, we got some room here, but for the most part, we will probably see interest rates worsen a little bit as we proceed going forward here. So just be a little cautious here if you are out there in the market and have a transaction with refinance or purchase and have not yet locked in here. You may want to get your finger on the trigger to pull that here soon. So that pretty much wraps things up. If you guys want to get more updates, just come over to Twitter. I was able to get to Twitter yesterday, but unfortunately I wasn't able to do the video and get that uploaded. But today, I've been on Twitter again so far this morning. So just come over to Mike Bjork, follow me there, and you'll always get your updates as always. All right, guys, have a great rest of your day. Thanks so much for watching, and we'll see you guys tomorrow. Bye-bye.